Hey, how's it going, everybody? It's Mike Weber here with your real estate market update for the Los Angeles County and South Bay Beach City areas for the beginning of February 2019. So we got a lot of interesting stuff happening out in the housing market right now. In fact, I thought it was going to take at least a few months for continued weakness to show signs in the data, but in fact what we're seeing is the signs of weakness are already there just from January to February. I want to take a quick second and just thank all of my new subscribers to the channel, as well as to all the people that have reached out for assistance with real estate in the Los Angeles area. I really appreciate it very much. So let's go ahead and dive right in. First off, I wanted to note that interest rates have come down a fair bit from roughly around 5% towards the end of last year, and they've been kind of hovering right under 4.5% for quite a while right now, and that's even with the Fed, on a continued upward trend of federal funds rate. Of course, the Fed just last week decided not to raise rates again, and it's very likely that they will not raise rates any further. Now, we would have expected that these lower mortgage rates over the last several weeks, would have helped to boost the market, but most of the preliminary data, as well as what happened from January to February, certainly doesn't show any sort of signs of strengthening out in the housing market. So let's jump right into the data. We'll start out here in Los Angeles County, and we'll just look at median sales prices. And what we see is that they are up 2.8% from a year-over-year standpoint, which is, really just outpacing the inflation figures that we get, the CPI or that are published. So certainly not rising as it was for the last several years, at an 8 or a 10% annual clip. So let's dive a little deeper. We'll look at Los Angeles County again, and this is where things get interesting. We're looking at the supply of inventory on the market, and what we see here is that it is up 40.9% year over year. But interestingly, as we saw this season, normally inventory drops down rather substantially, but in December, it really didn't go as low as it typically did, and it's already climbing, and it looks like it's just going to start shooting up here. So kind of the same trends that we were seeing towards the end of last year are already picking up steam here in the new year. Finally, for Los Angeles County, we'll just take a look at closed sales, and again, we see the same trend that we were seeing building at the end of last year. We're down 16% already from January to February on a year-over-year standpoint when looking at the data. In fact, when you look at this, we're at a lower point in terms of total number of sales than we've been in the last 5 years. We've never even hit that low of a point in all of the last 5 years. So definitely not many sales taking place out there in the market. The ones that are selling, the prices are still relatively high, at least in terms of an average across the board, but there's more inventory and a lot less homes selling out there in the market. Now let's dive in a little deeper to the South Bay and take a look at what's happening there. Now, kind of similar, we are still up 4.5% year over year. And certainly we had some higher points, towards the middle of last year. And as you can see, we've just kind of trended downwards and continued to go down since then. And I'm suspecting that it won't be another couple months before this number starts to turn negative. Now, if we look at the supply of inventory, it looks almost the same as Los Angeles County in general. We're up 47% year over year, so a massive increase in inventory. So this is all of last year, and as you can see, that was much higher than all of 2017, and we're already starting the upward climb in terms of inventory. Now, if we look at closed sales, we see that we're only down 4.1%. Obviously, the South Bay is a much smaller area, so there's not many sales taking place in January anyways, but certainly, another sort of low point, which is fairly normal for January. I think as the months go by, we will start to see higher year-over-year declines in the number of sales, just like we saw throughout all of last year. So, as you can see, we're definitely in a softening housing market. A lot of the national data is showing lowest pending sales in 12 months. So things are definitely slowing down out there in the market. What does this mean for buyers and sellers? if you're a seller and you're looking to downsize, or you're looking to move out of California or move to a cheaper area, I think that the data is saying that you want to sell as quickly as you can to maximize your sales price. It's going to be a lot harder to sell than it would have been 6 months or a year ago. So as a seller out there, you definitely need to be priced competitively, and you want to kind of get ahead of what's happening out in the market. If you're looking to just transition in the same area as a seller and then become a buyer, obviously rates are down a little bit. And so really it's a lateral move. If prices were to come down, in one area, they're likely going to come down in another area. So it's probably not as important to act quickly. If you're a buyer out there, this is really the best buying opportunity that we've seen in at least 6 years, 5-6 years. There's, opportunity to get out there and to be able to get a home with a lot less competition, to have more options to pick from, to get a property that's maybe in better condition in a better area, at a price that makes sense without having to, fight with so many other buyers. So if I can help anyone out there with anything real estate related in the Los Angeles area, definitely shoot me a text, give me a call. I'm certainly here to help. Otherwise, I look forward to seeing you guys for the March update. Thanks so much for watching, and I'll catch you next time.